I'm Surya Saha, and welcome to the Insurtech Story podcast, the platform to spread knowledge on insurance, innovation, digital disruption, and entrepreneurship. Our website, insurtechstory.com, and we are available on Spotify, Apple, and Google. Today, we will discuss on will Insurtech really disrupt the insurance industry, and I'm honored to have Alexander Skoll as my co-host to take this exciting talk forward. And for now, I'm delighted to welcome our guest for today, Ali Nawab, who is the Chief Product Officer at Sentience, which operates as an intelligence driven data science and behavioral change company. The company turns motion data into contextual insights and use behavioral change techniques to personalize engagement for safer, sustainability sustainable mobility, and well-being experiences. Sentience serves customers worldwide and is headquartered in Belgium. So Ali, welcome on board, and we are truly excited to have you for this show.
Thank
Would
you
you
so
like,
much, Surya. Thank you.
yeah,
Go ahead.
would you like to tell a bit more on what you do at Sentience and what's in for InsurTech at Sentience? But before we start, Alex, could you introduce yourself?
Yeah, sure. Very briefly in a nutshell. My name is Alexander Shell. I was born in Russia, so originally Russian, but holding two other nationalities. I worked in the UK, Switzerland, Belgium, South Africa, Korea, China, always for some of the big four for Barclays, and right now working in Switzerland for one of the larger banks in emerging technologies. That's really in a nutshell.
Fantastic. Welcome, Alex. And over to you, Ali.
Thank you.
So thank you for having me. It's a pleasure. I'd love to start by talking a little bit about what Sentience does and how we think about the insurance space. So at our core, we are a bunch of computer scientists and software engineers that were introduced to the insurance market primarily by working on it. So we weren't industry insiders. We didn't have the 10, 20 years of experience. And basically what we started, our origin story is that we started to work on time series data analysis. So looking at large streams of data coming in, trying to make sense of it. Motion intelligence is an area where we got an early opportunity with a ride sharing company. As we were kind of in the formative years of our business, we got invited to a technical bake-off, if you will, by a large ride-sharing company that wanted to have mobile phone-based telematics in their system. And because we had no knowledge of how the insurance industry really worked or what the norms were, we basically just built a first principles, bottom-up telematics product that was an order of magnitude better than everybody else because they had rightly thought about all the long-term impacts and the second and third and fourth order effects and what the cultural norms of the industry were and what would sell and what wouldn't. And we basically were just saying, this is a problem that we need to solve for and we're going to solve it, right? So that's kind of how we got our start in the telematics space. Now, over the years, as I mentioned, we started with ride-sharing companies. Gradually, the technology that we built was also relevant to the insurance markets. And we'll talk about this in the podcast in more detail, but the world in insurance is changing both very quickly and very slowly, right? Depending on what perspective you have. And gradually, what we learned was that if there was a fast-growing insurance team that wanted to better understand their drivers to then orient themselves around a better offering, we were in a much better position to help them because we, as an organizational DNA, were just going faster, right? And how did we go faster? Well, we went faster by just saying, solve the immediate risk that was in front of us, and then figure out the rest of it as we go along, which I think is a diametric opposite of the way typically insurance tech companies in the market work. Still very early in the innings for insurance and Insurtech, and I think I'm glad to see podcasts like yours starting to emerge and get traction. But I think it's there's still a long way to go. There's still a lot of frontiers to be sort of explored. And I think we're at the forefront of it because we get to partner with some of the best companies in the world that are looking to change status quo on insurance. And it's not our doing, right? It's a lot of the challengers coming into the market, a lot of people who are coming in to disrupt a multi-hundred-year industry. And to be fair, I think the disruption is still a little bit further away, right? The large insurance companies are very well established. They still have a good monopoly in the markets that they operate in. And the disruptors, even though they're valued at $1 billion or more many times, are a very small percentage of their overall business when you compare that to a large insurance company. So happy to go into all of those things. I said a bunch of different things in there. So happy to double click on a couple of them as we go along.
Well, that's really interesting. I was just trying to learn a bit more on Sentience and what you guys are doing and where the journey of Insurtech, is on. It's just I just came across some very interesting stuffs. That is, you guys have all also won an Insurtech Product of the Year award in 2020, I believe. So that's on the
Yes.
automotive sector, and also some brilliant traction that you have gained for in the digital insurance agenda. That's DIA's Munich Winner Awards as well in 2017. So anything you would like to add on that part?
Yeah, I think we bring a very different approach to the clients that we work with. We are selective about who we work with as a business because we're still a small company, about 100 people, distributed in different parts of the world. And I think because it's like I mentioned, such early days in this business, it's a lot better to be more convex than smart. And I'll maybe double click on that in a little now that because we don't know what we don't know, both us and our clients, there is a lot of trial and error that needs to happen before we can get to a product or a solution that solves a problem in a demonstrably better way. By demonstrably better way, I mean it has to be 5 to 10 times better than what they have today. Otherwise, if you look at like things like technical errors, model errors, organizational challenges, a lot of that improvement will get diluted away, right? So the thing that we've done because of our size, we have had to be very careful with who we work with. And then once we start working with a client, many of the large names in the world in different geographies are our clients now. We really go in with sleeves rolled up, right? So we kind of say, okay, here's the problem that you're trying to solve. Here's what is possible with the tech stack of today. How do we arrange and sequence these things so that over a year of us working very closely, we can make sure that the gains that we're bringing in for our client are causation and not correlation, right? It's very interesting when we see a competitor that has 40 different use cases with one company, and all of them kind of work in a couple of slides. But then when you go into the detail, when you go through the data, when you start to look at what impact this would have on the balance sheet, or when you interview an exec, they'll kind of say, yeah, it's interesting, it's new, but it's still going to take a long time before we're going to make this mainstream. So I think that approach of being very client driven, every company that we work with, that continually tell us that our differentiator is the fact that basically we become part of their team almost as we go and solve a problem around, let's say, detecting crashes, or let's say improving the customer experience or privacy, just general safer driving. And then from a customer standpoint, there's two types of customers that we have, right? That there's a lot of people, more and more Insurtech startups are coming into the world. So there's really two kinds of customers that we have, right? We have the big customers that have been around for, let's say, 100 or more years. They're very established. They've got very fixed rituals and processes around how they do things. And you need a robust set of evidence to get the executives at those companies to change something that frankly works for them, right? And And then on the other side, you have a lot of these challengers, right? A lot of these challengers that currently fall outside the law of large numbers, but they've got an innovative idea, they've got an innovative offering, they've got a really different spin. There's so many factors that go into an insurance offering, and they're really trying to tweak one or two of them and keep everything else the same. So the offerings to those two types of customers are very different, right? So to the large incumbent, you need somebody who's going to partner with you for a year, roll up their sleeves, do whatever heavy lifting needs to be done to make the case for something that is 10 times better than what they have today. Now, on the challenger side, it's typically a small team. They have funding constraints. I mean, even if they've raised tens of millions of dollars, in the insurance market, that's not a huge amount of money. So, and they want to go fast, right? So they want to have a developer experience that is a little bit like Stripe. They don't want to have long meetings. They don't want to have steering committees. They don't want to have any of those things. They just want to make some part of their app or software figure out if a person is driving, if they are a regular driver on that car, if they are using their phone while they're driving, if they're making a lot of left turns, if they're harsh braking, if they're stopping suddenly, if they stop in the middle of a highway, and all such things, right? So the challenge that we have is that we have to operate on two cadences. One cadence, which is almost like a quick serve fast food kind of thing, where client's going to come in and they're going to want something, and we're going to give it to them as fast as possible. And what is on the menu is exactly what the product is. On the incumbent side, it's the exact opposite, right? It's a very bespoke, almost like you go to a catered dinner where you have a personal chef that says, what do you want to do? What are your dietary preferences? What do you feel like today? And then we kind of curate a nice gourmet meal for them. Obviously, what they pay and what the challengers pay is also very different. But I think that our ability to balance those two things has kind of been our main differentiator.
Right. Yeah. As you rightly said, in the digital insurance journey, the key is the customer experience, and that's where everything starts. And also to rewind back a bit earlier, where you've mentioned about the Insurtech, which is witnessing a sharp rise in recent times. So if I would like to add that over the past few years, Insurtech has emerged in the insurance space with respect to investments, technological developments, what customers are needing each day, and their changing preferences, and so on and so forth. So, with respect to investments, it has you have also touched upon it a bit, and what I would like to add that it has grown by leaps and bounds. So, whereas around $140 million was invested annually in 2011, so even that's a quite a old data, but it's quite a huge number back then when we were still in a very, very nascent stage of this. So, this sort of an increasing disruption that we are seeing in this space each day and what we would witness in the days to come. Uh, what's your views on InsurTech disrupting insurance? Is it something really going to be a game changer, or do you think InsurTech just as an isolated player, it's will not be able to disrupt the industry without the help of big incumbents there?
That's a very good question, right? And I think there's a couple of answers there, right? And the way I like to think about it is that um, we're all going to be relatively wrong about what things look like a year or two from now. But what we're going to be really wrong about is what things will look like 5 to 10 years from now, because there are so many variables here. There's so much, it's very easy to look at it from a top-down perspective and say, look, here's some macro numbers and here's a line, and we can extrapolate that line, and in a year we're going to do this. And the numbers there are fairly robust, right? Like, so if you look at IT spending across a large insurance company, that's been doubling every year for the last 5 years. And I think that trend is only going to further, because the insurance companies are going from a place where their primary job was not to lose money and not to blow up, and everything else all else being equal, just don't lose money, don't blow up. If somebody gets into an accident, you have to be able to pay out their claims. And you think about how to capitalize yourself and how to make sure that you're in the clear from a regulatory standpoint. Customer experience, no one cared, right? And I mean, rightly so, because if you look at a typical insurer and their client base, um, and the way I think maybe we can dissect it a little bit is that if you look at the extremes of the two sides, right? So if you look at the extremes where, for example, we have a client in the Southeast that is a 300-year-old insurance company. Their office is literally inside the castle walls, right? Like it's so old and the tradition is so deep that they've been in an industry where innovating is the last thing they're supposed to do. Their job is to protect value. The way you
Right.
protect value is you make sure you have enough money in the bank so that when you underwrite the risk, and let's say your risk gets concentrated too much in a space and you blow up, you have enough insulation to be able to protect it, right? Now, when we talk to those insurance companies and we ask them things like, what are your customer touch points? And they say, well, typically the customer touch point is once a generation, right? So we have a person, he has insurance with us, and then, his son is, let's say, 20 years old. He writes us a letter or comes in now to our office and says, this is my son, and he's going to now be the patriarch or whatever of our family, and he's going to take care of our insurance. So typically, yeah, once in a generation, we go and talk to our customers, and now that's changing, and we're trying to sort of talk to them once a year, and it's very difficult because they are also like saying, "Why do you keep getting in touch with me? What's wrong?" Um, and things like that. So there's that extreme, right?
Yeah.
On the flip side of it, right? If you want to take the other extreme for like, there's startups like Lemonade and Root and Metro Mile and so many other businesses where it's almost on a day-to-day basis, right? I can go in and toggle a switch that turns coverage on or off. So if you look at those two extremes, there's still a long way for the disruptors or the challengers to come in and proverbially disrupt the castle, right? The castle is still holding strong, it's doing good. They have, for the last 300 years, been in a business where they have to protect value. And I mean, there's some exciting stuff happening on the frontiers, but it's not really something that's making them say anything beyond, okay, let's have a small innovation team in place. Let's just look at what's happening, but we don't need to drastically alter our business in any way. So if you look at it from the large incumbent point of view, that's kind of where they are, right? If you look at the disruptors point of view and you hear and you read their blog posts, it kind of feels like the whole insurance industry has now upended itself, and these small companies, 5, 10 of them, have and emerging and growing faster, are basically taking the insurance world by storm. And I think both of those things are true to a degree, but they're also false in the sense that there's a nice middle, right? Where, for example, if I take a step down from the insurance company in the castle to like let's say like an American brand name insurance company, they're now saying, well, how do we do this? Well, one, we have a lot of tech debt, right? We have a lot of legacy systems that were designed by us to serve our own needs, to better underwrite risk, to better improve fraud, without really having a focus on the customer. And because the UX of new insurance companies is so easy, so fun, and we're basically still trying to get people to do wet ink signatures. Um, we need to compete here. So what do? We do it in two ways, right? One, we upgrade our systems and we do your typical digital transformation. You bring in Accenture or McKinsey, IBM, and a combination of those people, and they give you like a 5-year plan to completely transform your industry. And really what that does is it brings you to par with where you kind of should be today, right? So what do you do with the fact that you're still not incredibly competitive, for example, with a Root or a Lemonade or somebody like that? The most interesting clients have basically set up an offshoot, right? Like an arm's length startup, if you will, funded by them, run by their executives, but it lets them go a lot faster. It lets them, let's say, pick a state in the US. So instead of going nationwide and trying to learn lessons across the whole country, it lets them say, I'm going to pick a small state where the regulatory requirements are a little bit more amenable to early stage companies. And I mean, it's easy to figure out because if you look at a lot of the early stage insurance startups, they're also domiciled in a couple of jurisdictions that are friendly, right, to new Insurtechs. So you go in there, you start competing with them, you build a product, you build a community, you build a better user experience, you start to learn what your customers care about. It's also a different customer demographic, right? So that's also an interesting trend where a lot of people are reducing their car ownership, and they're also going towards mobility as a service. They're also like on all sorts of things like scooters and bikes and whatever. And if you want to give them a 360 insurance offering, it's actually very difficult to underwrite that risk, right? And I mean, you've probably heard this from every expert that, insuring an 18-year-old versus insuring a 35-year-old in a different postal code used to be like as simple as picking up a number off of an actuarial table. And the real difficulty was kind of building that actuarial table. But, if the data going into that actuarial table is changing all the time, and I mean, I like to give this analogy to our clients where I say, like, think about your pricing system as like a database that is like an SQL database that's used to like rows and columns, right? And it's used to getting new rows in all the time. But instead of rows and columns, you're sending it videos and pictures and metadata of what someone's driving behavior patterns is. They just, they just don't know what to do with it, right? Like, so there's a widely quoted idea that says, the data is increasing and the data is proliferating. But a lot of that data is very high volume garbage for the recipient system because it's like saying, look, I understand premium renewal dates and I understand age and postal code and maybe that's another 25 variables. I don't understand screenshots of a crash, or I don't understand um, details of the fact that this person has been increasing the number of left turns that they take, which are, in some cases, which are predictive of a crash, um, that they've been increasing the number of left turns that they take by an order of magnitude every quarter. So the likelihood of them getting into an accident is a lot higher. And then if I go deeper into that stack, a lot of car accidents are occurring because the other trend, which is like highly engaging addictive consumer apps like Facebook, Instagram, Twitter, TikTok, they are awesomely engaging. So, they are very tempting to take a quick peek at when you're waiting at a traffic light or when you're kind of driving at slow speed. So, a lot of crashes also occur because people are using their phones in the car. It's dangerous, but it's very hard for the insurance company to pick that up, right? So how do you do that in a way where um, you're not basically just penalizing the customer, but you're also sharing some of that gain? And I think that trust, building that trust and gaining that trust is a difficult hill to climb that not many companies have been able to achieve yet. So on the other extreme, like the early stage companies, I think their problem generally is that the tech is great. I think everybody, both left and right of that, extreme value curve that I just kind of drew out for you, is also saying there's a lot of um, AI and machine learning in their products. And I represent a machine learning company here. So um, two things there, right? So the good thing is that they're building a bottom-up product, right? So they're building a product that's in the real world. It's got real users. It may be a couple hundred, couple thousand, a few million, but uh, they're a lot more grounded in reality of what is going on. Now, AI is not a silver bullet, right? I mean, we've been working in this space for a long time. There are practical problems around. Um, the number one problem is overfitting, right? You take some data, you train a model, and now the model over calibrates towards a certain thing that was represented in your data. So until you have enough data to be able to claim that AI is going to effectively take away a lot of what the insurance companies do from a workflow perspective is a little bit sales talk, right? It will happen, right? It'll happen like when it happens, it'll catch up a lot faster than we think it will. But I think where we are today, the smaller companies just don't have enough data yet. They're growing. And the larger companies have too much data that they're not necessarily able to process in any sort of meaningful way, which creates very interesting opportunities for companies like ours, right? Because what we basically go in and help them do is we help them build a bottom-up product that is fairly easy and modular in the sense that we can detect when somebody's using their phone, we can detect when they're in the car, we can detect if they're driving to work, we can detect if they're driving back from work, if they're picking up kids. All of that is done in a highly privacy sensitive way. We're headquartered in Belgium, so we take that stuff very seriously. We've been involved in some of those conversations around digital identity and privacy and pseudonymization of personally identifiable information. So I think there's a way, it's a fine balance, but I think there's going to be a lot of scenarios, like I mentioned, that'll play out in the next couple of years. If you look at Insurtech as a whole, all the ecosystem participants, I think it's looking very good for both consumers and for the industry players because we're moving to a point where insurance is no longer about um, you know, having most of the odds stacked in the insurer's favor because they underwrite the risk, and as long as they are capitalized and they don't blow up, the rest is okay. I think it's becoming more competitive, and I looked through some of your posts and podcasts in prep for this conversation. I think the analogy that you make to like the fintech industry is apt, right? I think the way we've seen that industry play out, we're probably going to see the same thing play out in the insurtech space, possibly at a faster rate because there's a lot of things that have been learned there that don't need to be relearned now.
Yeah, absolutely. Insurance industry as a whole is very conservative in nature, and it's very exciting to see how it is coming up because of the push that's coming from the startups, coming from the insurtech, uh, people who are starting up with new technologies. It's giving a tight race to the incumbents, and the ideal way to go ahead. It's not competition, but it's more on the partnership that will, shape the future for this industry. So that's some lovely takeaways there. Alex, over to you if
Yes,
you would
sir.
like to, have some discussion points from your end.
Yeah, sure. There are a couple. Exactly. So when you mentioned the fintech industry, what I always find fascinating is the fintech industry itself is not really a revolution, right? And we normally let's take Revolut or let's take TransferWise or now Wise and some of the other companies. I mean, you always have just a new front end, but in the back it's still the same payment rails, everything else. If we take crypto aside, and for me, it's really interesting that the fintech industry itself grew over time, not only to a very large market in general, but also that there has been no real underlying innovation. Well, in InsurTech, it's completely different. Where actually processes, where actually the way of doing business and the way you facilitate the entire process end to end. Just imagine it being a factory, so in the middle being a supplier at the beginning, a factory in the middle, and some output at the end. That there is really a revolution happening, and I find that quite exciting. In your view and in your perspective, what do you think the insurtech industry can learn from fintech, and how can the insurtech industry really leverage the learnings that are existing currently?
That's a great question, and I think it's a great observation. I 100% agree with you on the insight that fintech is largely a front end, right? Or a window to the existing storefront. And I think having said that, there's value in that front end, right? So the surprising thing for me, I think, like maybe if I go back like 8, 10 years and a lot of these fintech companies were coming out, I was like, okay, so this is just a front end on the same process. How is this innovation? Why are they raising so much money? And I think that the where I was wrong there, right, was that even if you change the storefront, which is, from an innovator's point of view, a fairly trivial improvement. It's not a step function improvement. there's still a whole bunch of value that gets created for consumers that have otherwise been left to talk to a broker or, go through the yellow pages and go figure out who they want to interact with. Um, and you're right. I think in insurance, we have a bigger opportunity. That's why I believe that we are probably going to go faster because in insurance, like the way we work with our clients, after we've rolled up our sleeves and worked with them for a year and we've helped them, you know, carefully select a variable that they want to optimize, and we've been able to get to a point where we can do 5x better than they were doing before, it's real money for an executive to be able to pay attention. So it's not like a nice science fair project where we say, oh, looks nice and it's got nice bells and whistles. It's more like, we've done this on a very small pilot scale with, let's say, a couple thousand people. This is what the insight is. This is the way we would do it differently. And now, if we were to do this, gradually scale it up over the organization over the next 5 years, we stand to make a considerable amount um, of profits, right? And I think that's a really great motivator for really large insurance company because you have to think that they're conservative. They've been trained to be value protecting, right? So they're saying, okay, I don't get to lose any value by doing this because this is really a marginal investment on my company's part. It's not taking away my ability to underwrite or capitalize myself. And it's also creating, let's say, like very, very simple example. Even if you get like 20 basis points of reduction in fraud risk by identifying people who, let's say, go into a parking lot, set up their cars perfectly, and then crash them. Um, the gains from picking up things like that are huge. And I think if we go back in the industry, where sort of telematics and dongles came out of was the fact that um, there were car theft has always been like a big expense item on the insurance company's side. And once you get the dongle in there and you get a low jack kind of a device, and you can even make a small dent in the number of cars being stolen, particularly in geographies where the theft or geographies where a specific model may be very popular for theft, you immediately see that that can be translated across a wide swath of places. One. Two, I think that the other revolution that's happening is that typically insurance and technology, digital transformation in insurance was left to um, you know, very well-funded companies in Europe and the US, right? US and Canada. And if you look at like emerging markets or frontier markets, it really just didn't exist. Like there was no conversation, the capex alone of getting something um, like a digital first insurance company was out of the question, right? And now, I mean, we get so many inbounds and we're working with several companies um, in countries where we really don't know much about the geography there, but like we get inbound and say, hey, does your telematics thing work in these cities in this country? And we're like, we have no idea, but we're willing to try it out, right? Like so I think there's A, the market size is getting bigger, and B, the attack. So I think the thing that's non-obvious to a lot of people in the insurtech space is that the way to win is to pick a workflow that matters to the stakeholders in the larger business and go hard at giving more data to be able to solve that problem, whether it's claims, whether it's automated claims processing, whether it's fraud, whether it's let's say post-crash experience for the consumer. Um, and go hard at it, right? Because we have a lot of data. It's useless if you don't put it in the right context. So if we can help an insurance company provide that right user experience, which looks like a front end, uh, it makes a world of a difference, right? And I'll talk about one more thing when we maybe like in your next question or something. There's another interesting angle that we've got thought about it, but I think that's going to really change the world.
Cool, thank you. So do you have questions on your side or
Yeah,
should I continue?
the last point for this session, if I would like to, request you to summarize in 2 points that What, according to you, is keeping insurers from using insurtech more effectively in today's scenario?
Sure. So I think two things. Number one is a tech debt, right? So if you look at a large insurance company, they have a lot of legacy system, a lot of legacy decision making around how they were doing a certain thing. And for an outsider to come in and attach to their existing system requires a considerable amount of work in a business that is not traditionally been geared to um, for revolutions and things like that, right? They're actually they're geared to do the opposite. So I think the second thing is there's for a lot of these solutions that are there, they're um, they're skewed on two extremes, right? Either they're a very broad solution where you could do anything, right? So for example, and that kind of comes more from a almost like a consulting firm place where they have great reports. And I used to work at a consulting firm, so I can identify some of the challenges with that industry, right? Um, they're not really interested in revolutionizing per se the product or the industry by going into the details, right? They're kind of their per place in this market is at the top, and they kind of want to look at it at a macro view, right? And in reality, the way things are done, the way things are changed is micro view, right? If you look at all these early stage companies that are coming out and they're raising so much money, um, it's because they basically looked at this place and they said, if we try to integrate with the insurance company, it will probably take us 2 to 3 years to get this thing done. If we also layer on the regulatory requirements that are different for different geographies, you can add another year or two on top of it. And then we're about 5 years away from getting something in the market that can get to scale, because until we get to scale, our insurance offering is largely invalid because there's not enough numbers in there. So what do? We become a full stack insurance company and we go and compete with them directly, right? So those two reasons are primarily what's preventing InsurTech from going faster. Having said that, I think um, because the outsiders have been able to show a lot of decision makers on the inside the castle decision makers what is possible, it kind of creates a nice cycle where now they're like, oh, okay, if this is possible for them with the resources that they have, imagine what we can do with the resources that we have. And there is a little bit of like mimetic behavior here where, instead of the company trying to figure out exactly what they need to do, they have a bit of a blueprint to follow, right? And vice versa for the smaller companies. They don't need to recreate the insurance process. They don't need to recreate the claims process. It exists. I mean, it's been around for a long time. They just need to make it 10 times better. And that sometimes is very hard to do, but in other times it's actually relatively straightforward, provided you lock on a few variables. Um, I think another really interesting thing that we're seeing more and more is that you see uh, when I look at the companies serving big insurance, right? Like so companies like ours, I think there's very good point solutions. So, for example, there's a system that you can take photos of a car that has been in a car crash, and it'll automatically try to identify what parts need to be replaced and what the claim cost could be and things like that. But if you look at it in the broader picture, it's a very specific point solution in a fairly large workflow. So one thing that I think is missing, and we're actually trying hard to push it, is that we're trying to help think a bit like the insurance company, our client, and say, if we were to think from first principles, what is an insurance company trying to do? The insurance company is trying to underwrite risk and then profitably maintain the contract. So if they're writing, let's say, X policies, and of them, a percentage are going to get into a car crash, well, it would be good to know if somebody got into a car crash And then it would also be interesting to try to reduce the expense and the administrative costs that would go around processing that car crash, everything from generating a first notice of loss to the follow-ups, to the repair estimations, to estimations of bodily injury, to fault, negotiation, etc. Those are expensive business processes, but not anything that you can 10x, right? How can you 10x? Well, why do car crashes happen? Okay, well, car crashes happen because people are under the influence, people are using their cell phone, people are doing something else, they're very tired, or it's just one of those things where they were not at fault and somebody came in and something bad, like an actual accident, right? So now that we have more insight into the fact that more and more people are using their phone while they're driving the car, how can we intervene before the car crash happens? If we can get that happening, if we can get that going, then we are actually in an opportunity to create a 10x product, right? So how do you get somebody to not get into a crash? Well, you get them to not use their phone while they're driving the car. Okay, how do you get them to not use their phone while they're driving the car? Because maybe 20,000 engineers at Facebook are trying to make sure you click that like button, and so there's like an army of people trying to get your attention. And I mean, they don't necessarily care that you are in a car or you're on your couch, right? They don't have that data to be able to make that decision. So how do you do that? Well, you have to go into applying the same techniques that the large social media companies do, and you have to build behavior change, right? How do you build behavior change? Well, in our case, we went and we acquired a behavior change company, and then you take machine learning, behavior change, and like a good, great front end experience, and you combine all those three to build a product that gradually gets people to change their behavior and use their phone less and less, using the same tools and techniques that a lot of the large tech companies use to get you to come back more and more. And now we've gotten to a point where if you have a young driver, I mean, if you look at any like 19-year-old, they're 50% on their phone, they're 50% in the real world, right? So how do you get them to not do that behavior that they're doing all the time when they're not in a car, not driving the car, to become a safer and better driver, both for themselves and both for the insurance company and their family? So we've basically been working hard at solving the second and third degree problems with a lot of our insurance companies. And I think that it looks really good. Again, like I said, it's very early innings, but we have a couple of pilots with several thousand people underway where we've put all these things together. And then the conversation becomes a lot different than, hey, we can help this process of claims go 20% faster or 50% faster. To be like, hey, what if we can reduce the number of crashes by this percent? What does that do for your business? What does that do for your risk appetite? What does that do for your ability to offer more services? And frankly, I think a lot of behavior change products in the market are not reproducible, right? So like now you've got an actuary or somebody who's got a training in actuarial science, and you're trying to show them that we're getting people to use their phone less, and it's not a coincidence, right? It's actually an intervention that works. So then you are basically saying, I've got to set up the equivalent of a randomized controlled trial, and I've got to show that the intervention that I'm making is actually getting somebody to use their phone less, which is actually getting people into fewer crashes, which is also reducing the cost of processing that claim and also the cost of servicing that claim for the insurance company. And for the consumer, it's making them safer, it's making the children safer. It's keeping them out of a lot of distress that comes with a car crash, I hope you never experience it, but like we've done a lot of research that, says like most people, when they get into a car crash, they actually end up changing insurance companies because they don't want to deal with those people anymore, even though, just because it's such a traumatic experience. So I think that's kind of where we see the industry going. The final thing I want to say here is that as we collect more and more data and we get more invasive about the things that we're learning about somebody, we cannot forget about privacy, right? So privacy is, like again, as we were doing research onto our crash detection product, a lot of consumers said, look, we don't want our insurance company to know we got into an accident because they're going to raise our premium and we might want to go get it fixed, the car fixed at the, local garage or something like that. So we've also been working hard to build a lot of our algorithms so that they run on device, so that the privacy of the consumer is really fully controlled by them. And I think that's also where the mobile platforms are going. If you look at iOS and Android, they're also trying to force more and more data to stay on the device, as opposed to going to some cloud server where it may be processed and reused altogether, as opposed to trying to make the process more optimized, right? We're also focused deeply on making sure that the privacy of the consumer is held in the highest esteem and not compromised in any way. And then finally, I think there is another trend that I want to leave you with, and that is around a sustainable driving, right? Sustainable transportation. A lot of our customers and consumers, when we poll them, they are they're acutely aware of the impact that the transportation industry in particular, but also others, have on the environment. And how do we facilitate a greener planet? Well, we could drive less, or we could use more sustainable modes of transport. What is the incentive for the insurance company to do that? Well, if you have a car that gets driven less, it's actually way better from the insurance company's standpoint. So they're also incented. And our job, I think, in between all of these things and the way we think about it is that we're trying to make sure that we align incentives well enough so that it creates a win-win-win for everyone. Um, Whereas traditionally, I think if you go back 100 years, it was incredibly asymmetric in terms of incentive and benefits. You needed insurance because, there was this blow up risk, but the insurance company kind of had all the power and the consumer had little or no power. And because of the fact that software is eating the world, the common trend is that more and more power balance is shifting towards the consumer. And our best customers, like these insurance companies that are hundreds of years old, realize that, right? So they're not in any kind of delusion about maintaining the walls of their castle or making the walls even higher. But it takes them a little bit of a jump to get there. And that's kind of where InsurTech and InsurTech startups come in, because they help a lot of industry leaders visualize what's possible, right? It's one thing to make slide decks about something, and it's another thing completely to build something that says, okay, go and use this on a couple thousand people in your team and see how their attitudes and behaviors around, let's say, using their phone in a car, or let's say teen drivers, um, think about risk. Because and not to belabor you with frameworks or anything like that, but to be able to do that, a company has to first observe behavior, they have to predict behavior, they have to change behavior, and then they have to retain that behavior for it to be meaningful and useful for everybody. And I think our stack and the way we work with our clients in a very sort of in a dedicated way is I think the way, because it kind of straddles the line between a point solution company that says, here's my system, here's the box, install it and go, and the consulting firms of the world that are sort of more heavy on the strategy and less on the implementation. I think that the middle line is where we'll see a lot more companies creating 10x or more value over the next coming years, and I'm very excited about that.
Sure, absolutely. I think the value that we perceive I mean, what insurance actually would provide its end customers, it's the primary area of concern now. And just to add, the entire modeling in the insurance industry, it's going to change drastically.
Yes.
So, how we look, how we perceive insurance, and how we perceive risk, the entire risk transfer model is going to be drastically changing in the days to come. So it was a great talk, Ali, and of course, a great question from Alex as well. Some good takeaways there and a fantastic discussion. So I thank you, Ali, for that, and for your time, for being in this show this evening. I would also like to thank Alex for your time. As always, It's a delight to have you. And lastly, thank you for listening, and see you at our next episode. Take care, stay safe, and goodbye for now.